I made $70,000 just from one trade last month, and this was using just one concept. And that is exactly what I'm going to talk about here, because a lot of traders would overcomplicate this. But I know that if you sit through this video and you watch until the end and you understand this one concept that I'm going to talk about, you'll be able to apply this in your live sessions right now. I entered on this trade on the 18th of May and I exited fully on the 3rd of June, giving me a total of $70,000 worth of profit. And I did this all by just using one simple concept, and that's exactly what I'm going to talk about here. The concept that I use to profit on this position is the same concept that I use in every single other of my trades that I take. And that is direction. Direction is what allows you to go from confused and overwhelmed every single day into finally having some consistency in the market, which will let you consistently have profitable days, weeks, and months. Because trading at its core is based on direction. When you enter, you're saying the market is more likely to go in one direction over the other. That's your entry, your stop loss, and your take profit. So now let me show you exactly how I read direction, how I apply this in every market that I trade, and how I was able to make $70,000. Let's see exactly how I made $70,000 from this position. If you want to purely master direction with a whole course that I built for it, then with the first link in the description, you get access to the full free platform that I created called mastertradingdirection.com, where you have interactive exercises and a full course for you to master this. Direction is all about answering one simple question. It doesn't matter if it is crypto, indices, FX, it doesn't matter. It's all about answering one question. And that question is, what is the market choosing to respect? Because like this, you stop projecting onto the market what you want to see, and you let the market come to you and tell you what it is choosing to respect. So why did I take this trade? Well, first of all, we can see that we were on a pretty steep downtrend on hype. And then eventually we had the massive sweep of the lows, and this gave us a strong reversal from which we started forming higher highs and higher lows, coming into this order block. And notice what happens directly after. In one day, we reverse 1, 2, 3, 4, 5 single days. Not only that, we engulf, we come back to the order block that was created, and we continue moving bullish. So that to me is screaming that we are bullish and now is the right time to buy. Not only that, we also have a lot more volatility, because look at the difference between this sort of price action and, for example, all of these other reversals that took 1, 2, 3, 4, 5 days. 1, 2, 3, 4, 5 days. This is different because after we have the sweep of the low, we already manipulated, we already engulfed. This is where I see that there's a high probability, and the market has already told me that it's choosing to respect bullishness, because the market moves higher, comes all the way back towards the order block, moves higher, comes all the way back to the order block, goes higher, comes to the order block, confirms, and then we have that push to the upside. And then when you go onto the 4 hour, you will see exactly why I entered, because on the 4 hour, what you can see is that we had that push to the upside, we pull back to that fair value gap, we react, and from here I execute and I let the market run towards my target, which pretty much was all-time high. But since it got there so fast, I let the market run for a few more days that allowed me to pretty much maximize my position. But if you notice, there's no secret behind this trade. Now, this was a spot position, right? I had my stops below this low, but everything was confirmed to me. Sweep, market shift, confirmation, boom, and this is how I execute. This is pretty much the type of entry that I enter all the time on the lower time frame, but I simply did it on the higher time frame, because when you understand direction, what you apply on the lower time frame, you can apply on the higher time frame, and what you apply on the higher time frame, you can apply on the lower time frame. So there's not much else to talk about this specific position besides letting you understand exactly how I apply the same things on NASDAQ on a daily basis, especially because that crypto trade, it requires way more capital. I had to put at least $100,000 in this position. While on NASDAQ, you can take advantage of prop firms like FundedNext that give you access to about $50,000 worth of capital for only $80, right? Or daily payouts just for $100 for a 50K account. And with code Kimmel, you can always get the best discount code. Now on NASDAQ, while a lot of traders were saying that it were very tough conditions to trade, we were able to capitalize on the whole move to the upside. Why? Because we were able to understand direction, and because we understand that just because the market sweeps all-time high or goes past all-time high, that doesn't mean that the market has to now reverse. So we were able to take advantage of the market when it was going up and not lose when it was going down. And let me show you exactly how we did it. So once we had this massive sweep of the lows, we had this strong engulfing, which by the way is exactly what happened on hype. We started only looking for longs, because when you ask yourself, what is the market choosing to respect, you can see the daily chart is showing you that bulls are always taking charge. Order block moves higher, fair value gap moves higher, order block moves higher, order block moves higher, fair value gap moves higher, order block moves higher, so on and so forth. Answering the question, what is the market recently choosing to respect, is the most powerful question that you can ask yourself. Because the big difference now is that you're saying, market, what are you doing? Instead of saying, what do I think is reasonable? Our minds are not made for trading. We see something going up 10% in a few days and we say there's no way it continues going. But the truth is that in trading, a trend is more likely to continue than it is to reverse. And there's an amazing quote that I read in reminiscence of a stock operator that says, the first eighth and the last eighth are always the most expensive ones, which means trying to call the low when the market was moving down was more expensive than letting the market go and only trading, instead of trying to call the low here, only trading this bulk of the move. That's where most money is going to be made. It's not on the reversal, it's on those continuation trades on the daily chart. And obviously, you then execute on the lower time frame. Now, this reduces your confusion because you might be always looking for longs and shorts, and maybe you go up and then it sweeps, but oh, then market structure shift, maybe we actually go to the downside. Oh, now we fully reversed back to the upside. How could I have forecasted this? By simply understanding direction, you're cutting your workload in half. Because if you say the market is more likely to move higher today than it is to move down, then why are you looking for shorts? Because you know, at the end of the day, the market is more likely to move higher. And I can tell you that just that change is going to completely change your trading. By understanding this, you will let go of FOMO and you will finally focus on high probability trades. Let me show you exactly how. When we are on the charts, you will use the daily and the 4-hour to find the direction. Then you're going to use the 1 hour and the 15-minute to find the key levels. From these key levels, this is where you're going to find your entries. If we quickly go back to the hype position, we see that we have the daily chart screaming bullish. In the 4-hour chart, pretty much saying, yeah, daily, you are correct. We are moving higher. Then what do? I go to the 1-hour chart. I find the key level. We have the fair value gap. We have that reversal. I enter and we move to the upside. So the idea is always the same. Daily and 4-hour for direction, 1 hour and 15-minute for key levels. Let me remind you that the reason why this simplifies it is because now you're looking for half of the key levels, because you're also only looking for, if you're bullish, the bullish key levels, because all of the bearish key levels here on the left just end up being disrespected because we are on a bullish trend. Now let me show you how this works consistently. On the daily chart, we've seen that we are bullish. Now, notice how. We have the market open on this candle, we pull back to the order block and we move to the upside. We pull back to the order block and we move to the upside. We pull back to the fair value gap and we move to the upside. We pull back to the order block and we move to the upside. This was a 15-minute key level. This was a trade that I took and this was a 15-minute key level. And yes, this also gives us a couple of losses. This is not a magical thing. You will still have losses even if your direction is correct, because as you can see, the market is reacting out of a 15-minute order block. But now what about the shorts? Everyone can long in the bull market, which by the way is also not true. A lot of traders always try to catch the reversal. I'm telling you, do not try to catch the reversal. If you go to mastertradingdirection.com, you'll have a whole course on this and I'll show you how trying to catch that reversal is always going to hurt you until the market shows you clear indications that it wants to go to the downside. And that you will see on the 4-hour chart once we start failing to create higher highs. For example, right here, we have the market open right here. Right? This is the market open. If we ask the question, what is the market choosing to respect? Look, there's a bullish order block. It was disrespected. There's a bullish order block. This was disrespected too. So can you see that at this time, I am no longer looking for longs, and this is why I didn't take a loss on this day, because the market is choosing to respect bearishness. And then we start moving down and down, and this is where I executed on the shorts and took a winning position. Now, as I said, this is not free from losses. I took one loss and I took one win. But then notice how the next day, because we had the sweep of the low, the tap of the key level, the market structure shift, the retest, and the second market structure shift, what did I do at the market open? I started to long. And this is why I've been able to short on one day and long on the other. It's by understanding the direction that I'm able to have massive trades, massive position trades, but also be able to trade on a daily basis. Because I know that not a lot of you have a lot of capital to put on one specific idea that you have, especially if it doesn't work out. But this is why direction applies in every single market. Doesn't matter if we're talking stocks, crypto, FX, doesn't matter. I've shown you that if you start looking for direction on the daily and on the 4-hour chart, and you start looking for the key levels on the 1 hour and on the 15-minute, everything will change. Your trading will get simpler and you won't be confused anymore. And if you want to see a full strategy on this, you can check out this video right here. If you want to get mentored by me, the second link in the description is going to be my mentorship. If you want to check out FundedNext, you can use this link right here. And if you want to master direction with a whole course and interactive exercise, then check the first link in the description to learn in-depth direction for free.